Perfect. All right, this is Trevor Higgins here with Fairway Mortgage, and today we have a treat for you, especially you investors. So today we are talking with an expert in his field about a lot of different things, but primarily the 1031 exchange. It's a huge topic. A lot of people know what it is, but they don't know the ins and outs. We're going to go through some of those today, but also just all about real estate investing and everything. And I'm joined with and by Jeff at 1031 Specialists. Jeff, thank you so much for joining us and talking through some of these things.
Yeah, it's my pleasure to be here, Trevor, and it's I look forward to the discussion.
Perfect. Well, before we get started, if you wouldn't mind, share a little bit more about your background, what got you into
Sure.
investing, and what gave you the idea to create the 1031 Specialist in your guys' company currently.
Yeah, no, it'd be my pleasure, and yeah, it's been a cool career so far, and yeah, so I started, yeah, my name's Jeff Bemis. I started my career at Ernst and Young as a CPA. So out of college was doing that. I was having a lot of success there, but I wanted to do something more in finance from there. So I went and changed a bit in my career path from being a CPA to I went into consulting. I worked for a small private equity advisory firm. Our clients were doing mergers and acquisitions primarily in the lower middle market. So buying little companies, putting them together, looking for interesting synergies and growing them, and then ultimately selling them. And I was an advisor to those firms who were executing that strategy, and was doing that for a few years, and met some people who were starting a new hedge fund, and they asked me to come along. And my role at this fund was to be sort of our corporate investment lead. And so that was doing anything from equity, debt, hybrid instruments, and investing all up and down the capital structure in both real estate and corporations. And so I was doing that I did that for quite a long time. So when I joined that firm, it was 70 million under management, and by the time I left, it was about 4 billion. And I led about half a
Wow.
billion in my own portfolio. So it was a really interesting and dynamic ride. I did a lot of real estate transactions. We leveraged and invested in platforms, real estate itself, and pretty much service providers and everything in between. And so yeah, super interesting, and really really a cool spot that I sat, and I had a lot of autonomy. And about 4 or 5 years ago, I just really felt like I wanted to start something myself and build something. And my father's been a tax attorney for his whole career, and had been in and around 1031 exchanges. I joke that my mother's all the codes at my mom's house still have 1031 as their way to get into things. So it's been sort of in and
Yeah,
around, and
yeah.
my parents have a bunch of real estate, and I've been very successful at it. And so that sort of inspired me to get working on that again. But so when I decided to change my spot from Wall Street, I really wanted to start helping clients again, and really help people find ways to build wealth. And one of the things about a 1031 exchange, it's not really a market to itself. It's just a tool for real estate investors to really maximize returns, and on an after tax basis, right? And real estate has so many amazing tax attributes that allow you to offset current income. And then the beauty is if you want to change, adjust, modify your portfolio for age, desire, to change asset types, or whatever it might be, which I'm sure we can talk about. You can do so without having to pay a dime in tax, versus if I own IBM stock and I want to go buy Coca-Cola stock and I sell it at a gain, I pay tax, use after-tax dollars to buy the next thing. You don't do that. So you're offsetting current income with appreciation and other things. And just the more I've always known about it, again, like I said, my dad was a tax attorney, but the more I really thought about it, the more I just felt like people are not understanding this. And so what I built is what's called a qualified intermediary. So we own a firm called 1031 Specialists, and when you do, and we can go into this more, but when you do a 1031 exchange, it's IRS requires that you use a qualified intermediary to do so. And in doing so, you can't take constructive receipt of the funds. And so you must hire someone like us at 1031 Specialists to do that. And so our main goal is to educate folks on the opportunities of 1031 exchanges, why it shouldn't be intimidating, how real estate investors across the country are using it, particularly ones with large portfolios and folks you go, wow, they've really nailed it in real estate. They're using this tool over and over and over again. And then once it creates complete generational wealth because your heirs very likely won't pay any tax. You got the current tax benefit, and they won't pay any tax once they get a step up in basis once all of our times come and our kids inherit what we built. So that's a bit of the background. Is our firm is helping thousands of clients execute on 1031 exchanges, and we're advising and helping folks every day. And it's a really cool second act of my career where I was always at really large institutional firms and now trying to build that same thing for myself. So yeah, that's a little bit of the quick background there and what we do.
That's awesome. No, that's awesome. So, I mean, yeah, you started going into it a little bit. For anybody listening that's not familiar with what a 1031 exchange, give us a high level overview of what it is. But
Yeah.
I also know there's different types of 1031 exchanges from reverse, different
Yeah.
types of things you can do. So, just super high level, basic overview. This is what a 1031 is. This is a ballpark idea of the scenarios that we use it, and go into that real quick for us.
Yeah. So why is it called a 1031 to start? Is it as 1031 section 1031 is a code section within the IRS tax code. So that's the area with that which governs this. So a 1031 exchange is basically, in short, is a sale of one piece of real estate, an investment property. So one investment property or a property used in a trade or business and that is sold to purchase another investment property. And you can do so without paying a dime in tax. So I'll give you an example. You bought a property for $500,000. You've owned it for a number of years. You've depreciated it and take some benefits of 200,000. So now you have a $300,000 what's called cost basis. If you want to go rotate into another property, let's say you own a single family home that you've been renting for a number of years and you want to rotate into a more commercial style property, you can sell that $1 million that thing you bought for 500,000 and now it's depreciated to 300,000. Let's say you sell it for 1 million, you would have 700,000 in capital gains that you pay. And depending on where you live, you'll pay 25 to 40% between federal and state. Depends on where you live. California and New York, as an example, will have a much higher tax impact, but you'll pay depreciation recapture, federal level tax, state tax, and possibly net investment income tax. So you have these layers of tax. So if you sold that property, you would, for $1 million that you bought for 500 and depreciated to 300, you'd have $700,000 that you'd have to pay in tax, or roughly 300,000 in tax that you'd pay if you just sold it and took the money. So yeah, your $1 million is now just 700,000. Well, you can take that $1 million, and if you do a 1031 exchange, you can use all of those proceeds to buy another piece of real estate anywhere in the country, any property type, as long as it's for investment or business purpose. So folks are buying property, holding property. There's a lot of capital gain. They want to change their ownership structure, or they're getting older and they want to go more passive, or they want to change what kind they own. They can sell it and rotate in another piece of property as long as you buy an equal or higher value property and reinvest all your equity that you achieve. You'll have 100% deferred tax. So it's really powerful, right? Your earnings are
Yeah.
compounding. Your earnings are compounding tax free, and it's a massive give, right? And does not exist in other financial assets there. You mentioned other different types. There are, I mean, the most common 1031 exchange is I own a property, I sell it for $1 million. That money And how it works is it's like any other real estate transaction, except I get introduced to um I get introduced into the middle of all the flow. So instead of you receiving the funds in a forward exchange, you sell the property. Those funds are housed by us in segregated escrow accounts. We hold on to them while you search for a replacement property. And for many of our clients, they have already lined all that up, and then they can buy a replacement property with the funds that we hold, and all of that is deferred. Um, all that is tax deferred. So that is the most common, is people use the proceeds from a sale to buy a replacement property. There's also a type of exchange called a reverse exchange, which you mentioned, where you buy your replacement property first. So let's say I own my $1 million property and I want to buy a $1 million property. I can go, if I generally speaking, it takes a little bit more financial wherewithal to pull this transaction off, just because you need to be able to bring capital to the table to buy the replacement property first. But you go buy the replacement property first and you do some structuring with us as your qualified intermediary and accommodator. We help you buy the house inside of a structured vehicle. It's very straightforward. It's done very commonly. So you buy the replacement property first, you own the replacement property, then you have 180 days to sell your relinquished property. And once you sell the property you own, you then use those proceeds to effectively pay yourself back for the property you bought, and you've done a 1031 exchange. So that is also a tool that folks like, particularly in slower markets like this, that feel like you can control the timelines a little better.
That's awesome.
Yeah.
So, I mean, obviously, the big one is you could potentially save hundreds of thousands of dollars in taxes
Yeah.
and liability there. But what are, and I'm, in investing, there's a million different strategies for investing, from
Yeah.
short term, long term, mid term, commercial, class A, class. I mean, we can go on forever.
Right.
There's a million different avenues. But first, you can, to the best of my knowledge, and tell me if I'm wrong, you can sell a residential property. Let's say it's a residential investment property, and I
Yeah.
could change classes. So I could take those funds and use the 1031 to transition into a commercial vehicle, or vice versa, commercial to residential properties. Is that the case? Is that true?
Yeah, absolutely. It 100% the case.
It's more
And
about value and
it
occupancy, right?
it it needs to be an investment property, is really what it comes down to. So if it's a house or a property that's used for personal use, and that's generally defined as more than 14 days in a given year of personal use, you can't 1031 exchange it. But that's mainly the hurdle. It needs to be an investment property held for the purposes of investment. If you're a serial flipper or you are a serial developer, and that is your business as being a developer or flipper, and that is real estate is your inventory, that is not a 1031 exchangeable asset. So it needs to be something that's held for investment. It doesn't mean you have to hold it a long time. There's no rules on that. But if you're a home builder, as an example, you can't 1031 exchange those homes, because that's your inventory and that's
Right,
your business
right.
is making the gain on those. Having said all that, if you own a single family home, you own a duplex, you own land. Like a very common one that we get is folks who inherit land, right? It's a non cash flowing asset. So they have a bunch of land. There's a use case for someone else for some other purpose, whether it's a developer for a community or some kind of commercial use. Selling that land and rotating into a yielding asset, whether it be as part of a syndicate that's structured appropriately to take 1031 exchange money, or go buy multifamily. But in truth, there's a number of asset types. So you can do industrial, office, multifamily. You can do mineral rights. You can do hotel, motel. Like, truthfully, any real estate asset inside of the United States is an available 1031 exchange asset. And so, very commonly, folks who have a lot of land value in, say, California, New York, and maybe they have some yielding part of the asset, but it yields a low yield. They'll say, hey, maybe I want to rotate to something in the Sun Belt that has a much higher cash on cash yield. And because I'm looking for that in my part of my life, very commonly also is folks who are getting older, and just sort of changing their willingness to be an active manager of their real estate. or active overseer of the management of the real estate, because you can't just hire property management and not manage the managers, right? You got to know what they're doing, how they're doing it. If you want to go more passive, that's a very common one too, is okay, I own 3 single-family homes and one duplex. I'm going to go into a professionally managed and investment firm backed real estate deal that's a $50 million apartment complex as one smaller investor, but everything else is handled for me, and they just cut me rent checks every month. So those are the kinds of things you see, but I would say a lot of portfolio rotation. People always looking for what's the better and more interesting thing to do in this era of Airbnb, right? Like there's people make really smart and interesting purchases and get a lot of price appreciation, and they realize, hey, I can rotate into a market that I think is really exciting. Maybe I'll do that and get a higher yield while I do that. People always trying to tinker and find the most optimal portfolio construction for their risk profile and age and other factors.
That's awesome. That's awesome. Now, in your experience, obviously you've seen a lot more of these than I have from the lending perspective. I mean, we help facilitate those, but
Sure.
it's what you do. So, what would you say are if you had to pick a couple of the most common mistakes people make when executing or trying to execute a 1031 exchange? What would you say they are?
I'd say number one, like, so there are timelines associated with 1031 exchange that I did not mention yet. There's when you sell, if you're going to sell your property and buy another one, you have 45 days to identify your replacement and then 180 days to execute on the purchase of the replacement property. So those are defined by the regulations surrounding a 1031 exchange. And so folks are worried about timelines, will I have enough time? So to me, it's two things. It's number one, I would just say planning for folks who are just knowledgeable that if I want to embark on a 1031 exchange, you can call us early, call you early, Trevor, like get in front of it and just talk about what you're thinking about. There's all kinds of strategies depending on your situation to where you can sort of work on how the close works. The timelines only start when you actually close the transaction. So from that perspective, you can do a lot of things to advantage yourself on finding the replacement properties, et cetera. But also you need to have a qualified intermediary like us in advance. You have to have someone like us before you close. So if I were to say the biggest thing that people have done, and just, it happens all the time, even in larger transactions. We just had one the other week call us up. They just closed on their transaction and wanted to execute a 1031 exchange. You cannot do that once you've closed. It has to be done in
Because
advance.
the
So
money comes to you, and you guys need
if
to
the money goes to you in
escrow the
any
funds.
respect, or any value comes to you in any respect, depending on if you have seller financing, things like that, you will not be eligible. You've now violated the tenets of what is an acceptable transaction structure for a 1031 exchange. So calling us early, we don't charge by the hour when you call us to plan. We're just here to help you facilitate. Getting your lenders and your brokers and other advisors in position is really important. And thinking about the structure and the transaction goals. And then ultimately, I'd say other things that people make the mistake of doing is a 1031 exchange, even though it sounds complicated, it's just the same as any other real estate transaction, other than the money goes to us. And at the very end, there's a couple pieces of paperwork that get filled out as part of the close. You do not have to tell anybody when you're out looking for properties or marketing your property that you're doing a 1031 exchange. Because the
Right,
other the
right.
other criticism that happens a lot is, oh, people are going to know I have a gun to my head. They're going to know. And what we tell people is like, well, why do they even know?
Right.
You don't,
At
only
the
if
end
you
of the day,
tell
they
them.
get their money. They're fine.
Yeah, I mean, and so once you're way into the close and you're ready to go, we can reveal to the transaction that this is a 1031 exchange. And in the end, but while you're hunting or looking or otherwise, there's no reason to tell anybody. So I'd say those are some common ones, but really the ones is if you don't get us established in advance, and it's shocking the size of transactions that we've gotten calls after the fact. Is that the last thing I'd say too is, and this is partly what we're trying to do on top, is I think more people should be doing it than are. Obviously, that I'm sort of talking my own book where the business we're in. But part of the reason I'm doing this is right now, 1 in 7 to 1 in 8 transactions of investment property are 1031 exchanges. So just to let the audience know, like, it's a very large percentage already than what people might think of who's 1031 exchanging for invest. I'm talking about investment property, not for personal residence.
Right, right.
Um, but it should probably be more, right? Because
Yeah,
the compounding effects of deferring all the tax and getting the additional current yield on additional real estate versus, okay, I'm going to sell it. It's the right time. It's the right buyer. They want to purchase it for a really good price. Like, I'm totally, I'm totally supportive of folks going, being opportunistic, but taking the after tax dollars when you could reinvest it in other markets, other grade properties, right? So like if you have something that's a little bit run down, there's no reason you can't go buy something that's really top notch, maybe a little lower yield if you want to de-risk a bit, and you'll still have grossed up the amount of real estate that you own by 30, 40%, and thereby the amount of returns you're getting by 30, 40% versus other asset classes, say bonds, stocks, other cash flow yielding assets, whether it might be oil and gas, if you don't do 1031 exchange into it, it's all talking sort of royalty stream type thing. So it's stuff to think about, like the hurdle there to get over the after tax dynamics, even if you want to be opportunistic, say to me that way more should be doing it. I mean, our in-house view is it should probably be like 1 in 2 transactions should be 1031
yeah,
exchange. But yeah, I think people should be unintimidated by it. At minimum, just investigate if you feel like it's something that could fit.
absolutely. So, question for you on the 1031 side. Obviously, most investors hold their properties in an LLC or some type of
Yeah.
vesting vehicle. When you're doing a 1031, do you have to keep things in that same entity structure, or is that allowed to be changed? Tell me a little bit
Yeah.
more about that.
Yeah, I mean, the answer is it sort of depends, but I'll give the answer that I think applies to most folks, and that is um, most people hold for liability management purposes, hold real estate if it's a husband or husband and wife, let's just say, or individual or a married couple. Um, they hold it in an LLC quite commonly. And even if you're a parent corporation, they'll have separate LLCs set up for each individual real estate transaction. So the answer is that if you don't have partners in the LLC and it's just one taxpayer, you can have one LLC that owns a piece of property, sells it, and then a newly formed LLC buys the replacement property, and that is perfectly allowed. And the dynamic there is the LLC disregarded for tax purposes? Said another way, are you, as the individual who owned the real estate before, if you were a single member LLC, you would have ignored the LLC for how you prepare your taxes.
Right,
Same goes for the LLC that you formed if you're the same, but still a single member. If you have partners, you need to be very mindful of how you do a 1031 exchange. So if you form an LLC and you both buy a piece of property where each of you own 50% of an LLC that owns a property, that is something that you need to be very aware of, that you need to it's called the same taxpayer rule. So in that case, the taxpayer would become the LLC because you have two partners who own a piece of real estate. Now you can both own that piece of real estate as partners where you're so-called tenant in common. And then that way you would actually own an undivided interest in the real estate, and you could sell your piece, buy anything you want. But if you own an LLC interest, you will need to talk to attorneys and your attorney and CPA to figure out. It depends if you want to stay together as partners and sell the piece of real estate. The LLC itself can do it, right? So that LLC can sell the property and buy another one and do a 1031 exchange. If you want to go part ways, that is where people can get into a little bit of hiccup. Or if they want to sell a piece of real estate they own and go buy an LLC interest, so they're not actually buying the real estate, they're buying the LLC interest. It's a little bit of legalese, but it makes a big difference for how they've crafted this. They want you to sell real estate, buy real estate, not
right,
sell real estate and buy a LLC membership unit, set of membership units that are deriving profit from real estate, because that's more you're buying LLC interests, not the real
right.
estate. So it's a nuance, but it's just worth highlighting. But if you're just somebody who wants to do liability protection, which I certainly encourage, selling your property that's owned by an LLC you have or a trust you have, which is also disregarded for tax purposes, you can do that. And I'd say most people do. So that is very commonly done.
Awesome. No, that's great.
Yeah,
So, gear kind of switching gears a little bit more to just the investment strategy. Obviously, you have a lot of
yeah.
experience in real estate, on a much higher level, likely than most people. So, what would be your best advice? Let's just say I'm a normal guy, and I've got three, four, five single family rental homes that I've acquired over a period of time. What would be the best advice that you could give somebody on when to how to gauge when to do a 1031 or when to sell?
I mean, there's so many factors that play into a decision to sell a piece of property. So I'll say I'll reframe the question if you don't mind slightly.
Yeah,
Is I don't know what the right time is to sell. Like if I knew that perfectly, it would
right.
be
You'd be yeah,
awesome, right? Like I mean, I don't know
you'd
that,
be a
but
billionaire.
but I would say there's a lot of like what folks who are doing things that are utilizing 1031 exchanges are folks who are finding that the profile of their portfolio that's different than the single family homes they have is something that they are really excited and appreciate. And so circumstances such as this are what folks are finding compelling. So where they own homes in areas that have seen a lot of growth and the land component of the home that they own becomes a very valuable piece, right? So let's say you own a home, you bought a few homes in the Midwest for $175,000. I'm going to make it up, and it could be in Iowa or something, okay? And we see this profile, and so you made a really smart investment. It's been a really lot of price appreciation. The homes are worth maybe 350 or 400, and it's really a lot of the land that's appreciated because nice communities have been getting built around this area that was up and coming. It might even be that the people who are going to be investing in or buying your property are going to buy it and fix it up to live in. You may have additional land just because of the timing of what you did. Things like that, where it's like, hey, this price appreciation was really dynamic, and we've captured a lot of what we thought was going to be the big trend in a community that we were really pumped about. And our yield profile on how we're renting it hasn't grown commensurately with how much the price has gone up. So if I bought it for 175,000 and I could make um, a 12% yield on the equity I put in. Now they're looking at it as okay, 400,000, it's really on like a 7% or 6% because of the how much it went up in value, but I could use that money and rotate it into another area that I think has a similar dynamic that could could optimize the capital. Um, People will do that, right? So, you know, places that a lot of population inflows and where folks think they can get compelling yields has been a popular trade. Where a lot of California rotation into the South, Florida, etc. We see a lot of that. um, and folks, especially like as we have a good contingent of clients who have homes that are of reasonable size, like a reasonably high value, where they see that the yield profile is dramatically better in other markets. So that's a popular one. I'd say, I mean, I can't emphasize enough, the land moving, a lot of inherited land as baby boomers are
Mm.
getting older, is really, folks inherited the land 7 years ago. It's gone way up in value. So there's a lot of capital gain. They didn't do anything with it. It ended up being a great decision. And now, but they can rotate that into something that becomes a core investment and retirement asset on a yield basis. So that's a really interesting one as examples, right? But
Yeah,
they're
yeah, yeah.
numerous. Yeah.
So, just for anybody that's listening sake, if you're thinking about it, does your firm kind of dive into those specifics more of, hey, I want to make sure I'm in the best position I could be. Do you help not less experienced investors with diving through that process and kind of
I mean,
navigating?
our main role is facilitating the 1031 exchange so that you have
Yeah.
all the paper. We do three things. Okay. We give you, a lot of helpful we don't advise you on your real estate transaction, and we aren't
Yeah.
your CPA, but we consult with the client to help them understand all the things they need to do to achieve the tax deferral, and we'll talk through that. We create all the paperwork so that when you need to file all the requisite paperwork, and to the extent that anybody ever got audited in the future, you'd have everything you needed in a ready to go package. That's all done appropriately and properly, and you've got that put together in a package. And then we safeguard the funds while we have it sort of safely and securely, which is a huge priority and really core to my background. So those are like our
Yeah.
main three roles as a qualified intermediary. Having said that, I'm always helping clients issue spot things that they can do. As a qualified intermediary, I can't formally be your CPA, right? I also can't be your broker. Like the broker can't be your qualified intermediary. It's by rule. But when people call us, they ask me all kinds of questions. I am more than happy to be a advocate for you. If you want to ask me any questions about, things that are going on, or just, takes I have on portfolio or otherwise, I'm more than happy to field those kinds of calls. But our job is not to consult and provide you with real estate advice of what you should or shouldn't buy. That's just not what our firm does. But yeah, certainly I'm here to
Keeping
help
us safe
clients.
from
And
the IRS. That's what we're doing.
yeah, I'm here to make sure that when you decide to pull the trigger and you want to do a 1031 exchange, that you accomplish that goal. And, we work with a lot of brokers and CPAs and attorneys, and getting a team around you of experienced folks is really important. They all serve a role in accomplishing those goals. And to your point with this person with 5 properties, and we've actually had a client who had 30 properties that they rolled into one big transaction. So there's all kinds of opportunities out there for folks who have these, really nice investments.
That's awesome. So I got to ask the question, and obviously, completely your opinion, but working with a ton of different investors, what would you say right now that you can see are growing or markets you have your eye on in terms of investment options?
Yeah, I mean, I'm I'm a little biased. I would say things that I think are challenging, or, newish rumblings around Southern California, with the insurance profile is a very out challenging and difficult thing. I think we're still in the early innings of finding out how that shakes out. So I think there's a lot of uncertainty there. So I would say one thing that, if I were to say, for folks who aren't, for folks who are in and around and already really embedded in this market, I mean, they're navigating it and have those relationships. But I think for folks who aren't in and around LA for the moment, I think there's a lot to be learned in the insurance space as far as where people are going. I think for I think Phoenix, Vegas, and Florida. I think it's hard to lose there. I worry a bit about Texas in some regards. It depends on the market. If I were doing it, I'd stay more core to Dallas, in my humble opinion. It just like
Mm-hmm,
like,
mm-hmm.
but I don't have a specific asset that I would say yes, this asset, no, that asset. But the I think the dynamics right now are actually pretty constructive for real estate investing if you can afford to do lower leverage. I think that, you know, people are really intimidated by cap rate expansion and the fact that where they borrow is so much higher. I would sort of take the other, side is, well, I'm not looking for people to make interest rate bets with real estate. If you want to make an interest rate bet, go do that with something that is interest rate driven. But if you can find great properties that would have been 2.5 years ago 4 caps, and now they're hanging around at a 7 because it's hard to borrow that much cheaper, and you can afford to do lower leverage, I think it's a really compelling dynamic for building sustainable wealth of capitalizing on that. I don't know whether rates are going lower or higher, and I think speculating on that is a very as somebody who invested in securities directly tied to rates for a very long time, I think that is something that is I would
It's
not
tough.
do. Yeah, I wouldn't go, hey, I'm going to buy this because rates are going lower. I don't like that. But what I do like is buying really, really nice stuff that you went, man, that would have yielded me 4.5%, and I could have borrowed at 2%. Now it yields 7%, but I borrow at 6.5. I think if you can afford to do it at lower leverage, I think those are actually really compelling opportunities that, if, let's say you bought, I'm going to make it up. Let's say you bought it at a 40 LTV for a property. So if you bought $1 million property and you had 600,000 you could put into it, and there was a $400,000 mortgage, and it's a 7%, and you get all this extra yield, but it's prime, like, and something you're like, wow, this will never be something I'm not insanely proud to own. You're going to wake up in 15 years, you'll have amortized a ton of debt, most likely, and enjoyed yourself a nice yield profile on something that you paid a far more reasonable price for. So those are the types of opportunities that I like, for regular investors is, maybe talk with your advisors and brokers. Go, look, what are the things that are really great where there's been some movement now in the price. And I think we'll see that happen. I think it's going to stay slow. Give it another 2.5 years, and I know feels like a long time, but it's not. And things will shake more loose than they are today. So that's sort of my overarching thought.
I love it. I love it. So, anything else as far as advice to investors, new, experienced? Any words of
Yeah.
wisdom that you could share on top of what
This
you've
is
already shared?
Yeah, I think hiring someone like 1031 specialists like us and doing 1031 exchanges is the biggest family wealth builder that I can think of that exists out there inside of the tax code that is really executable and accessible for average Americans. Okay. Because, and so and again, it's part of the reason I'm in this business is I just, I'm extremely compelled by the dynamic that exists here where I can offset current rental income with depreciation on properties I own. So the after tax yield dynamic is way more attractive. And then I can change properties if I need to into other ones if I'm have a different profile that I need for my portfolio, for my life, for risk tolerance, or wherever I'm at. It's still liquid because I can still control the ability to monetize if I ever need money for whatever reason. And when you pass away and it passes on to your heirs, unless you have at the current um, estate tax exemption, 26 million in value is going to step up to your heirs in real estate value that they will never pay a dime in tax on, and if they sold it the next day, have no capital gains. So all this benefit along the way gets like you actually never pay the piper on it, which is, I don't know, it's just a
That's yeah. I
really
mean, yeah,
unique
it's huge.
circumstance. It's huge. Honestly, it's huge. And um, for us who have we have a presence nationwide. So anybody who's thinking about doing a 1031 exchange anywhere they're at, we are there. We do a lot of business in California as well, and there's a reason that so many families in the California area have been so real estate driven is they've maximized on this, and it's not a trick. It's not aggressive. And the other thing, it's not aggressive. It's it's a very tried and true. It's been around 100 years, 1031
Yeah,
exchanges. So like it's not new. It's just not as known as it could be. So I would encourage people to really entertain it. I mean, look, it's certainly not for everybody, and there's going to be reasons why people want to monetize, and I totally respect that. Uh, but to the extent that it can fit, it's something to really entertain. And again, consider calling us. I'm always happy to talk with folks. It's not like you're going to get a sea of people who aren't me you can call, and I'm more than glad to talk with anyone at 1031 specialists. So
awesome. Well, that was actually my next question: is how can people find you?
yeah, so our website has tons of tools as well. We've also got a bunch of training and interesting like training courses if you want to do. We created an email masterclass that we think is really, really great. We've got an AI tool on the website that we've trained up only on 1031 related guidance, IRS actual rulemaking, and then any guidance, and then some of our own supplemental. I would not trust broad AI tools for questions on this. It is really wrong. This is one thing for folks. They're going to go into ChatGPT. It is not reliable. So we built our own, realizing that we wouldn't have done it if those broad tools work, but they take there's too much hard rule that they take liberty with. So we built one on our website. If you go to our chat tool on our website, it's AI backed, it's trained on a million word, a million words of just specifically 1031s. That's it. So use that. We also have a calculator on the website that's in Excel. You can play around with it. You don't have to form fill. And so there amongst others. So go to 1031 specialists plural.com, and all of that exists. And I think folks will find a lot of value there. I mean, we're really proud of the content and information that we've built. And it's mainly because we think, again, that 1 in 2 transactions should be 1031 exchange, not 1 in 8. And folks need to have the knowledge to get comfortable. And again, we can all, certainly happy to supplement it with my own experience, knowledge, and otherwise.
That's awesome. That's awesome. No, I think that AI tool is huge. Knowing
It
that,
really is.
right?
I mean, it's impressive.
ChatGPT fails. Don't
Yeah.
trust it, folks. You heard it here first.
I mean, this
10,
isn't to minimize ChatGPT. They are amazing, but as far as when you get to real niche stuff,
yeah,
you
anytime the
definitely need
IRS
to.
is involved, it's probably not a good idea to use ChatGPT. I'm just saying. I don't know. I did just see an article where ChatGPT just won its first court case, which was pretty crazy.
It's pretty impressive, and its bar
Yeah,
pass rate is really impressive. It can pass the CPA exam. I mean, I'm not minimizing their
yeah. No,
the
it's cool, but not for a
the AI.
1031 exchange.
But if you have specific questions, you wanted to, so go use our tool, and I think people will be really impressed. But again, I'd love to hear from everybody, and don't hesitate to call if you're thinking about doing one, and we're glad to answer questions.
Awesome. Well, thank you so much, Jeff, for jumping on. I really enjoyed it. I hope everybody got a lot out of it. And if you guys are thinking about selling investment properties, make sure to reach out to Jeff at 1031 Specialists. Get the inside scoop, put yourself in the best position possible, and make it a good one.